Hello everyone and welcome back. Jeb Smith here. In today's video, we're going to be talking about buying in this current housing market in 2021, and as a buyer, things that you should be aware of when making an offer and when you're receiving counter offers back. Because what I'm seeing right now is a lot of craziness with regards to responses from sellers when presenting offers. Now, if you've been watching these videos or you've been following the housing market at all, you know that you're in a very, very competitive environment. If a property is priced correctly, a lot of times you're having to go at the asking price, in many cases over the asking price, and do some creative things in order to help your offer stand out. But there's also things that it's hard for myself as a professional real estate agent that's been doing this nearly 18 years to recommend that you do. And I'm seeing a lot of this stuff come back in counter offers. And, as a buyer, these are things that you need to understand in a lot of detail what you're signing. In some cases, your agent may not know and be able to convey exactly what's going on. So we're going to take some time today. We're going to actually pull up a counter offer from a client that I recently submitted an offer on. We're going to talk a little bit about the offer that they submitted. We're going to talk about the counter offer that we got back and why it's not really in their best interest to accept those terms and how we responded to that, because I think that can help you if you're in this market. One, it can provide you some expectations as to how sellers may respond in some cases, but also how you can respond back. You don't necessarily have to accept the terms that the seller sends back in a multiple counteroffer or in a counteroffer at all. So we're going to talk about that in a little bit more detail as well. But before we dive into it, I want to take a minute and ask a favor. If you're new to me, new to my channel, it's all about real estate, helping buyers, helping sellers. So if that interests you at all, do me a favor and hit that subscribe button. And, if you have questions about this content, you need an agent referral, a lender referral anywhere in the United States, comment below or send me an email and I'm happy to make that connection for you. So let's take a minute and talk about the offer that we submitted in a little bit of detail, and then we're going to pull up the terms that from the counter offer and discuss what those mean. So this particular property was a single family residence, and the listing price on this home was $739. It only been on the market a couple of days. I pulled comparables on the property and thought, hey, it could probably worth about $750. So spoke to my client. They wanted to put in an offer at $750. We knew that they already had other offers and that this would be a multiple counteroffer situation. So we tried to present the best offer we could. So we actually presented an offer of $750 with an escalating clause, taking us up to $760. And if you don't know what an escalation clause is, I'll reference a video here where you can check out that in a little bit more detail and how those can help you actually win offers in this market. But we did an escalation clause up to $760, and we did things like we took the home warranty out of the offer. We didn't ask for termite section 1. We just made the offer as clean as possible. We shortened our contingency periods. We offered 3% on the deposit. I mean, we presented a very strong offer. So up to $21,000 over the asking price with this particular offer. And so a couple days later, we got a counter offer back. And so I'm going to pull that counter offer back, but this was a multiple counter offer. So in the state of California, if you receive multiple counter offers, you can send a counter offer back or you can send a multiple counter. A multiple counter means that you have more than one offer, and that multiple counter can be the same for every single person, or it can be different. You can send, certain terms to one buyer, certain terms to another buyer. And even if the buyer accepts that multiple counter as it is, that doesn't mean the seller has to go with your offer. They can choose one of the other offers. So I'm going to pull that up right now. We're going to take a look at it now for purposes of hiding the identity of the seller, selling agent, the buyer. I've just copied the terms, if you will, and put them on a document here so we can go over them. So this actually came over on an official document, not on a blank sheet of paper. But let's take a look at what these are. Now, I highlighted the ones I think are important because they're the ones that could essentially hurt you in the long run if something goes sideways with that transaction. So the first thing they're asking for is the highest and best price. This is pretty normal, which means that they're countered everybody back saying, hey, present your best offer. Now, our initial offer was $750 with that escalating clause taking us up to $760. So our highest offer at that time was $760. So my clients in this case decided to we'll talk about how they responded in a minute, but that's what the first thing means. The second is no loan and appraisal contingency. So this is where things start to get a little bit dicey, because in the state of California, you have 5 contingencies when you purchase a single family home that doesn't have an association, a homeowners association. 2 of those are the loan and the appraisal. You have the ability to have a home inspection. You get the ability to review the seller disclosures and use those as an opportunity to back out as well. You get an opportunity to review the title report. And if that doesn't, if there's something off there, you can also back out for that clause. So what they've done here is that they've removed our appraisal and our loan contingency. Now, the appraisal, understood, because we went above and beyond the asking price. So what they're saying is, hey, look, if the appraisal comes in short, you can't use that to back out of the contract. And I talked to my client about that, what that means. And so when you purchase a home in the state of California, this may vary a little bit in the United States, but you have to put down an escrow deposit, earnest money, if you will. And that money goes into a third party. In California, that's called an escrow company. In some states, it's an attorney or a title company or what have you. But that shows good faith. And in this case, the buyers have 3% mentioned on their original offer. So they were willing to put 3% deposit down for their escrow deposit. Now, keep in mind that money is 100% refundable until you release contingencies on the property, until you sign off your contingencies, which are typically 17 days in California for inspections and 21 days for the loan. Now, if you don't know what earnest money is, I'll actually reference another video here so you can watch on that, but I'm not going to get into a lot of detail. But once those contingencies are released, essentially you could lose that earnest money, right? It becomes at risk for the seller to take. And so you never, as an agent, want to put your buyer in a position where they could potentially lose that money. So in this case, they're saying no appraisal contingency and no loan contingency, which means that we can't use the appraisal and we can't use the loan to back out. So if the buyers can't get financing for any reason, or the appraisal comes in short, they're going to have to make up the difference on that appraisal in order to move forward, and their loan has to be approved. Now, both of these are risky, because what if something happens and their loan's not approved for whatever reason? Well, it's important to have a lender. In this case, my lender is actually working with these clients, so I know that they're solid on the loan side. So I'm okay removing the loan contingency, but are we okay removing the appraisal contingency, right? Because once we remove both of those, we've essentially lost 2 of our 5 contingencies in this case to back out of the contract. Now, here's another important one that comes up. The inspection contingency to be 7 calendar days. So that means from the time we go into escrow, we have 7 days to do all of our inspections on the property. So a home inspection, if we wanted a sewer inspection, if we were doing a termite inspection, any of that stuff, we have 7 days to do it. It can be done, but that's a really tight time frame. Typically, you have 17 days to do those. So 7 days is really, making us have to move quickly in order to get that done. So makes things tough. But they go on to say right here in the 5th one, saying home to be sold as is, seller will not credit repairs. So they're playing really, really tough negotiation. Not only are they saying we're removing the appraisal and the loan contingency, basically saying you might as well remove, your home inspection to some extent, because we're not going to do anything. But what this is allowing you to do is it's allowing you 7 days to back out of the contract after your, once you get your home inspection. And if, that they're not going to fix anything based on this, that essentially you got 7 days from the time you go into escrow to figure out what's wrong with the property. Are you okay with those issues, and potentially back out? Now, in this case, even though they say they're not willing to do repairs, as a buyer, you can still ask for them, right? Just because they say they're not willing to do them doesn't mean you can't ask. I've seen, that happen many, many times in contracts where the buyer, where the seller says, we're not willing to do anything. And as a buyer, we come back and say, hey, will you fix these things? And they end up doing them. But they're laying it out there up front saying, we're not willing to negotiate, so don't come and ask. So as a buyer, you have to decide, okay, I don't have my appraisal contingency. I don't have my loan contingency. My home inspection, they're not willing to fix anything. I'm paying $21,000 in this case over the asking price. Is this something that I'm willing to move forward with, right? Because at the end of the day, you get into this and, you need additional time or what have you, they can send you a notice to perform which typically, based on the contract in the state of California, gives you 2 additional days. So it could take it as far as 9 days, but in 9 days, you've got to decide whether or not you're going to move forward. And in this case, chances are your loan's not going to be approved in that short a period of time. Maybe it is, but your appraisal is likely not going to be back. And you could have potential issues with the home inspection. So are you willing to move forward, right? I mean, that's the kind of market that we're in right now and what you should expect as a buyer in some cases. Now, not all sellers are going to respond this way, but I'm seeing a lot of the same things in contracts these days. And as buyers, you need to know because sometimes agents aren't, they haven't been in the business. They don't have the experience, so they don't realize what, they can't convey to you as a buyer exactly what you're signing. So you need to make sure as a buyer you understand these things and what could be at risk. You could risk losing your deposit in some of these cases. If something goes wrong, or you could be liable to come up with a higher deposit or a higher down payment if the appraisal doesn't come in. And if you don't have that money, that could mean you fall out of escrow. So my clients decided to respond, and they responded with the same offer that they originally submitted, so a $760,000 offer. They were okay waiving the appraisal contingency in this case, but they wanted to keep the loan contingency in place, and they wanted 17 days to have that in effect. And that was really the big points there, right? So we didn't accept their counteroffer as it was. We came back and said, hey, look, we're willing to pay this price. We're willing to waive the appraisal contingency, but we want a loan contingency in place because we're not comfortable waiving all these contingencies and moving forward. And so, that gives them an opportunity to, make sure their loan's approved. In this case, they have the additional money for the difference in the appraisal versus the offer if it comes in less. So they were okay with that. But you need to understand, if you're not in that position, that is what you could risk. So just make sure that you understand what you're signing as a buyer when you receive counteroffers or multiple counteroffers, and when you're putting in offers that you truly get all sides of it, and that you got a professional on your side, right? That's why it's important in this market to have someone that has the experience, not someone that just or someone that has their license but doesn't really use it. Make sure you have somebody on your side to help guide you in the right direction, and make sure you're working with a qualified lender, right? Because if they're asking you to waive loan contingency or what have you, you need to make sure that you're solid. In this case, my client is solid. They still want to have that in place. So just make sure professionals in this market are a must. And again, if you don't have those people, reach out to me directly. And if you have additional questions about what I've mentioned here, I encourage you to ask them. I'm happy to help. But for now, I appreciate you taking the time to watch. Appreciate the support. We'll see you again soon. Have a great day. Bye-bye.